But look, in this market environment, you have to honor the trend of the market. And you have to structure your trades to take advantage of the continuation of this upward trend. While, and this is extremely important, be prepared and positioned to potentially benefit in the downward move in the market. In the market moves down actually faster than it moves up. So you have an opportunity to participate in a faster way, a quicker way when the market is moving down.
Helping our listeners make better investing decisions. And that's what we do here on Investing with Confidence is we talk about the stock market, options, futures, forex, how the financial markets actually work. We're going to talk about some terms like supply and demand, how the markets actually function, which is based off buyers and sellers. Before we do that, just real quick, we had a great week in the markets, kind of a slower week. You can see things really starting to slow down a little bit. S&Ps, the Dow, the NASDAQ, not a ton of movement, but great. There was still great movements in shorter term aspects.
Yeah.
And we had a nice drop in gold this week. Nice, beautiful drop. And we've been talking a lot about this dollar supply zone, I guess, for a couple months now.
Correct.
And we're right back up there again. So we potential selling there again. But we've seen a lot of great moves, and you've seen a lot of great moves in the stock market this week. What's been going on with some of these opportunities, but how can we as average investors start to capture some of these great opportunities?
Well, we're seeing a lot of rotation. We see money going from one sector to another sector, which just gives us greater opportunities if you can identify where the money is, where it's going, and where it's going to go. We saw the infrastructure bill. We're close to having everything ironed out there. There actually are some ETFs that are infrastructure ETFs. That's an exchange traded fund.
That's a tough word to say.
Infrastructure. You're right. Say it 100 times.
Yeah.
And then we see right now the financial sector has been doing very well. Technology has been taking a hit. Don't count on that staying there for a while. That's probably going to roll back up again, turn back up again. But look, in this market environment, you have to honor the trend of the market. And you have to structure your trades to take advantage of the continuation of this upward trend. While, and this is extremely important, be prepared and positioned to potentially benefit in the downward move in the market. And the market moves down actually faster than it moves up. So you have an opportunity to participate in a faster way, a quicker way when the market is moving down. But the key is to be prepared. We often use this, or I've used this skydiving analogy. You do not want to take up skydiving without having gone through some instruction.
Correct.
You don't jump out of an airplane and then decide, oops, I should have put my parachute on, because it then becomes a one-time venture for you. So be prepared. And I think one of the key things that we try to understand when people come into these classes you're going to be talking about today. In fact, we just had one about a week ago, and I think this is really, it was really eye-opening for a lot of people in that class. We always ask, what are you trying to get out of the market? What is your goal? And every male in that class said, I want to make money. One guy said, I want to make a lot of money. And then there was one lone voice, happened to be his wife sitting next to him, who said, I just don't want to lose. And that's the right answer. That is the key to being successful, is managing the risk. And if you don't do that, you're going to take chances. You're going to increase your risk. You're going to lower your potential to be successful. And I think that really is why there is such a big gap between what people's expectations are in the market and what their reality is. And the key is that the more you are able to manage risk, the greater not only your opportunity to be successful, but the greater the profit potential is that you can have. And, we can say this on the radio, and you might be saying, well, it makes sense, but how do you do that? I'm going to challenge you to come into one of these classes. I'm going to talk to you about a strategy, a foundational strategy we call core strategy, which does that. It shows you how to identify and be able to do exactly what I said. It's basically lowering risk and increasing reward. Those are the two things that you want to do, but you have to concentrate on the risk part of it to be able to get the reward part.
Yeah, and really what you want to do as an average investor is trade like those banks and institutions. I mean, that's what Al's talking about with the strategy. Is designed to identify where those banks might be trading and investing or buying and selling. and then kind of jump on their coattails. So when you're, talking about supply and demand, that's what we're talking about there.
Exactly.
How is it it's reading price charts, right?
That's what it is. It's like reading a price chart, like a radiologist would read an X-ray or an MRI.
Got it. So when you're doing that, you're placing your decisions based off of facts then, not news or TV or internet. And that really eliminates the emotions. And that really impacts a lot of people's decisions is what's in between our ears, right?
Absolutely. You have to control that.
Yeah. So and when Al teaches these investing classes, he dives into these techniques and strategies on how to identify, potential turning points in price, which is where the banks are buying and selling. And it all comes down to that one phrase, it's supply and demand. And that's really how anything in our life actually works. If there's more buyers than sellers, price is going to go up. More sellers than buyers, price is going to go down. Kind of like an auctioneer. When they're auctioning off, let's say, a car, and there's 20 buyers, price is going to continue to raise because there's more buyers than that one car, that one seller. Same thing when there's one car and one seller, price will start to, that's equilibrium. But if there's one car, or I should say one car and no sellers, what's going to happen there?
Well, we know what's going to happen.
Exactly.
Yeah.
Price has to go down.
Yeah, it's an economic law. And when you're talking about laws, those are things that really can't be argued against.
Yep, you're exactly right. And Al, goes over these techniques and concepts in these classes.